On the day that Prime Minister Modi leaves for the US to attend the United Nations General Assembly and meet CEOs of global energy firms during an event, India has taken big steps to attract foreign direct investment and boost domestic manufacturing. India has reduced the corporate tax rate for companies by bringing it down from 30% to an effective rate of 22%. For new manufacturing companies, the tax rate was 25% and it has been brought down to 15%. The new tax rate will be applicable from the current fiscal, which began on the 1st of April. Prime Minister Narendra Modi took to Twitter as he said that the decision of corporate tax cut is historic and a win for 130 crore Indians. Meanwhile, there will be no sunset clause for the tax benefit to new manufacturing companies of 15%. For new companies incorporated after October the 1st of 2019 and commencing production by March the 31st of 2023, the income tax rate will be 15%. Now, such firms will also not be required to pay any minimum alternate tax. The steps taken will help Prime Minister Modi in positioning India as an attractive investment destination to American firms on his US tour. Indian markets also gave thumbs up to the new measures announced by government, with BSE Sensex surging over 1,900 points post the newsbreak. The government will also suffer revenue loss of over 1.5 lakh crore rupees, which the foreign financial minister expects to be compensated through a boost dose for the economy. Now, experts say that the corporate tax cut will boost new investment and increase company earnings. Now, also a number of other measures announced to boost capital markets will give support to government's disinvestment program. Also, the super rich tax will not apply on capital gains arising from the sale of any security, including derivatives, in the hands of foreign portfolio investors. Now, this will help the government in attracting more foreign money through FPIs. And now let's get you the latest from Brexit, where the UK Supreme Court will be pronouncing its judgment on the legality of the UK Parliament's suspension early next week. Remember, Prime Minister Boris Johnson had suspended Parliament for 5 weeks until the 14th of October, a move that the opposition equated to silencing legislators. The top court's ruling will have no impact on how and when Britain will leave the European Union. It is only concerned with the legality of Johnson's advice to Queen Elizabeth II to suspend Parliament. If the Supreme Court rules against Johnson, the Parliament will reassemble, and rest assured Boris Johnson will face some tough questions on misleading the monarch. Johnson, however, is convinced by his move. In fact, the Prime Minister has not even ruled out suspending the Parliament again if the court judgment is unfavourable.
And I really have